Hi, welcome to Wealthy Mindset. My name is Oliver. Thanks for watching. I really appreciate it. Hope you're having a great day. In today's video, I'm going to cover BlackBerry Stock starting from April 23rd trading day to end of April for the most part. I'm going to analyze the graph to give you lows and highs, essentially price target predictions. Now, quick disclaimer before I begin, I'm not a financial advisor. I'm not a professional. And everything I do share with you is just my opinion. It is not advice. So please do not buy or sell based off the information I give you or the opinions I do form. Please do your own due diligence and research before buying and selling. I do own shares in BlackBerry, been holding for 6 years, so I'm a long-term investor overall. Okay, so now looking at the graph, basically we're continuing this cycle in essence, going up to resistance, getting knocked down, going down to support, bouncing back up, resistance down, support was supposed to bounce back up, but the market unfortunately on this day, April 20th, was down, so just got dragged down with it, so I had a false breakout. I'll elaborate more with additional stuff with the 5-year chart. Went back up, didn't necessarily get knocked down by the resistance line, but went back down. And I'm going to explain why potentially I think we're going to continue, for April 23rd, I think we're going to go down, hopefully bounce on the support line to go to back up to the upside. Essentially all the way back and forth until end of April for the most part. Now, if you're new to the channel, I highly encourage you to watch my last video, which goes in more depth detail to explaining the significance of these lines. If you watch that video, this video will make way more sense. This should still make sense, but it'll be a lot more clear, and that's more in depth. So it's going to be linked up here if you want to watch it. Now, if you've seen that video, essentially this is going to be update based off that video. So I think we're going to go down to bounce off hopefully this support line right here, which coincides with the moving average, which coincides with horizontal support levels. And the reason why is because the MAC line, the reason why we would go down, MAC line's in the negative direction in terms of moving average direction, which is a bearish sign. It's bearish movement. But before I cover the downside, I'm going to cover the upside, and then I'm going to go back down to the downside to relate it to the 5-year chart that I showed in the last video. So if we go to the upside, we're hopefully, and if we do, because I want to make it realistic, I think we're going to, if you're optimistic, bounce off the moving average. But I don't think that's going to happen. I think it's going to bounce off here. But either way, so $8.60, $8.61, somewhere around there to dip down, which we close at $8.64 on April 22nd, 2021. And if we go to the upside, we'll have resistance at, where is it, $8.69 to $8.71. I don't think that's going to cause much issues, but the main ballpark of the issues is going to be caused between the $8.80 range. So that'll coincide with the moving average as well at $8.88, depending on when we move it. The goal is to, in case if you're like new viewer and like following along still, we're trying to get up to the downward trend resistance line and break through it, and then getting up to this second downward trend resistance line and breaking through it. Now, if we go up to it directly right off the bat, let's just say on April 23rd opening day, it's around the ballpark of $8.98. But the only problem is, I think we're going to get knocked down, and I'll explain why. And then the next level is at $9.30, give or take. And I think we would still get knocked down for 2 reasons, so I'll explain further. And because the market, I think it's having some issues, because again, the tax stuff got mentioned, so that's going to cause issues. But I digress. So if we continue in the $8.80 range, quite a bit of resistance. Horizontal resistance coincides with $8.88 as well. So there's horizontal resistance at $8.82 to $8.84, and $8.89. Now, once we pass that, we'll have horizontal resistance at $8.95 to $8.97. We saw that today anyway, $8.97 as well. And then $8.91, I know that's technically lower, but that's in the $8.90 range. The problem about that, and the reason why I think we'll get knocked down, is it coincides with this downward trend resistance line at $8.97, $8.98 when I measured it. And the problem is, even if we do pass that, we could have a false breakout because we have horizontal resistance between $9 and $9.14. And you could just see, for example, here, just like a small portion, there's more horizontal resistance on the side. But if you just imagine, look at this dashed line, I'm just doing an amateur job, but you could see a bunch of times it just got knocked back down around the $9.14, 12 cents, 13 cents, around that ballpark. Yes, there was false breakouts, but it's just kept on coming back down and just bouncing underneath it. So they're getting knocked back down. So even if we do spike back up, I think what's most likely going to happen, have a false breakout, I think we'll just get knocked back down, where it might not even be noticed as a false breakout, and then continue down. So we'll see, hopefully break through it. Now if we do break through that like $9.14, we'd start heading to the $9.27 to $9.37 horizontal resistance level, primarily between $9.27 and $9.31. Between that range is the most ballpark, like most of the bulk of the horizontal resistance. After 9.31, it's a little bit not as strong, or it's not as strong as the between the 9.31, 9.27 price point. So, but that that level coincides with this downward trend resistance line, depending on when we meet it. The longer we take to meet these lines, the lower the highs will be. So if we meet it on April 26, midday almost, we're looking at $8.76 as resistance for this first resistance line. Now, if we pass $9.37, we're going to be at $9.50, which is going to be a huge task on its own. I think that's going to be quite a while to pass. If we pass it quickly, that's awesome. But I think that's going to take quite a while, because we have a lot of horizontal resistance at $9.50 range, so like $9.55, $9.57, and then even to get to $9.63, there's a lot of resistance on $9.63 where I could see us just getting knocked back down. But I'm hoping that once we get to $9.63, let's just say it's right here or something, or it's, yeah, that's around the ballpark anyway, then we would probably drop back down on $9.50, and I hope it starts stabilizing at $9.50 to go to the upside. But we'll see. Now, I think that's going to be taking pretty much all the ballpark of like end of April. But if you want to like include further prices, we have horizontal resistance between 983 to 988, then 995 to 999, and essentially we want to get to $10. Once we get to $10, we're pretty much good, because then we stabilize, I think, in my opinion. But we can't get up there quickly, because if we get up there quickly, we could probably drop pretty quickly and have a false breakout. Now if we go to a downside, we have support again on this moving average at $8.60, and then if we drop lower, we're going to be relying on the 850 range as support, and that coincides with this moving average right here at $8.51, $8.50 plus or minus a couple cents, plus this upward trend support line that I wouldn't put much faith on, but because it's the moving average, plus there's a bunch of horizontal support, we could pretty much hopefully somewhat like be optimistic that it's going to bounce off to the upside like right here. And so that coincides with the 850 range support horizontal, more specifically $8.51 to $8.56. So there's that. Then if we start trickling down, we have support $8.40 between $8.40 to $8.41, and then we'll start trickling down to the ranges of $8.30, $8.20, $8.10. There's a reason why I'm just going down quickly, because I want to explain the 5-year chart. So then we would hit $8.06. I hope we bounce off $8.06, but then essentially $8 if we go down lower, and that's the one I hope we bounce off of, because we could still bounce up to the upside at $7.99, $7.97, $7.96, $7.98, so on and so forth. But again, like I mentioned in the last video, if we break that level, unfortunately, and bounce back up to the upside, if we break $8, I think in the next few trading days, for trading weeks, we would come back down underneath $8. That's the issue. Now, the reason why I'm hoping that or expecting that we'd hold, we technically have more than 3 touch points if you count this as multiple touch points right here between July and August, but 1 touch point right here, March 2020, July, August 2020, December 2020, and then we're right here. So if we bounce off, the plan is to bounce off as support right here to the upside, and we could come down to, from what I measured, it was still 797, 796. But we'll see what happens. But that's basically it for the video. Thanks for watching. I really appreciate it. Hope you liked it. And if you did, consider dropping a like. It helps out the channel. Appreciate it. And if you have any questions, do not hesitate to ask. I'll try to answer them as soon as possible. And if you like videos like this or other stock videos, consider subscribing so you'll be notified when I do upload those videos. Thanks again. I appreciate it. And I'll see you in the next video. Peace.